Well, lots of movement in our ag commodity markets and all commodity markets actually today after, the rumors came out of the Ukraine and Russia negotiations that Russia would back away from Kyiv and reduce their military actions. Remains to be seen if they would actually honor that or not, but the markets are apparently taking them at their word for it today, and things have been selling off. I wanted to take a look at crude oil. West Texas Intermediate crude oil to be exact, and the May contract down $3.45. We're at 102.51 here today. Overnight, we got as high as 107.84, so it has given back over $5 off of that right now. U.S. dollar index has been plunging today. June futures down 845 points. We're at 98.210, and we've been watching the Dow Jones Industrial Average as well. June futures there, 210 points higher. We're back above 35,000 at 35,063. Well, grain markets all did a swan dive about 7 o'clock this morning Central Time in that Globex trade. And it's had follow-through selling after the open. Corn went limit down. Now it's back to trading, and we've clawed our way back about 7 cents from that level. May corn down 28 at 7.20.5 after a low of 7.13.5. And December down 14.25 cents as we speak. Meanwhile, soybean trade, we have the nearby May down 24 cents. We're at 16.40.25, and November down 22.25 at 14.46.5. Well, they had limit down trade in the Chicago wheat there for a while, and now look at it. The May, after going down 85 cents, is now down 36.25, and that would be at 10.20.5. That's a rebound of nearly $0.50 off of that earlier low. July down 35.5 cents. Kansas City wheat on the May contract is now trading at 10.38.5. That's down 32 cents on the day. July is down 29.75. And spring wheat has May down 27.5 at 10.52. July also 27, well, now 27.25 lower. So things may be moderating a little bit. Let's bring in Brian Hoops of Midwest Market Solutions and talk about this. You look at that at first glance here today on the trade, Brian, and it looked like somebody had opened that trap door like I alluded to earlier. But now maybe it's starting to get just a little bit of traction in the market. We got some big reports coming out, and we got the end of the month and end of the quarter coming up here in a couple of days. There's a lot of stuff that's tugging around on this market here.
Right. Yeah, you're exactly right, Marlon. The markets really fell early this morning, and it happened just within about an hour's time frame. So it was a real knee-jerk type reaction to some headlines. And then once the trade kind of had time to digest and we had closed for 45 minutes, then the markets, looked at this and thought, maybe that we're not as close to seeing a resolution as some would like to think. There was some reports coming out of Russia that there's a long ways to go before there's any type of an agreement or neutrality declared. And we started to buy back some of those short positions, or traders who maybe were short bought those short positions back and kind of squared up, because you do have some big reports coming out on Thursday of this week. You have quarterly stocks, you have planning intentions report. I think everybody's closely watching that planning intentions number as we badly need to plant more corn, more soybeans, and more wheat this year. And I don't know that we're going to be able to do all three of those things in this spring time frame.
And one has to wonder just how believable the numbers can be with the lack of inputs this year, too. That could really skew some of the numbers. Brian, we'll take a pause right here. We'll talk a little about the livestock trade when we return. Let's talk a little livestock here with Brian Hoops of Midwest Market Solutions. Brian, from what you're able to gather out there in the country, can you get a clue what we may see for cash cattle trade in the plains this week?
Well, not from any bid prices offered by the packers. So far, we've not seen anything out in the country. But, this is a third week in a row where we've rallied the futures market on a Monday, Tuesday, anticipating stronger cash trade. Show list numbers down again this week, about 5,300 head. So now we're looking at about 238,000 head show list numbers. So it certainly could see stronger cash trade, especially as the boxes are starting to move higher. Packer margins are increasing. They've got a lot of margins to work with, so they would most likely expand their kills if they can find the workforce to do that, and that should all lead to higher cash trades. So, we're I think trying to price that in with the futures. Of course, with the corn being sharply lower to limit down, feeder cattle got a big boost this morning. The hog market continues to trade just almost purely technical. It gapped lower on the opening this morning. That set off thousands of sell stops and has pushed that market into big triple-digit loss type territory, just the opposite of what's going on in the cattle this morning. So, cattle looking to trade fundamentally. Hogs, I think, are trading more technicals. And, we'll see some cash trade, I think, later this week, and hopefully it's at that higher money. April live cattle options expire this Friday, and then first notice day is next Monday.
Well, interesting stuff. So let's take a look at our current trade then, and our quotes are from Bar Chart. Okay, on live cattle, we have the April contract 35 cents higher at 140.65. And we've been talking about it all morning here, where the June seems to have the most volume, the most trading, and the most volatility. It's up $1.02, and we're at 137.80. All the deferreds are 50 to 60 higher right now. And as we move on to the feeder cattle market, we had some huge gains early on. Things have moderated quite a bit. The April contract up $1.67. We're now at 162.50. The May is still $3.10 higher. It's now quoted at 168.17 on the day. And keep in mind, even though it's that much higher, we're off of our earlier high this morning in that May contract by $2.25 or so. Now, on the lean hogs, this is how we're trading. We currently have the April contract at $1.62 lower, and May down $3.12. We're at 116.17, off of our high of the day by about $1.70 or so. All right, Brian, thank you so much for the time. Always good to visit with you. We'll catch you again soon. Brian Hoops, Midwest Market Solutions. Janet, back to you.